Hey everyone, Shopify's business helps enterprises build out their websites, including accepting payments and other things you might need when establishing an online presence. The company recently reported quarterly financial results that sent the stock price higher by almost $20 per share. It's now trading at $69 per share, up from around $50 per share. So I'm going to review the company's latest financial results, highlight the big picture items, and update my buy recommendation for Shopify stock. Coming into the quarter, I had the stock rated as a hold. I'll explain why I've had it rated as a hold, and then I'll update that recommendation and let you know if I'm keeping it as a hold or increasing it, upgrading it, or downgrading it in this video. So let's get started.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So I have here highlighted the year-to-date stock price chart for Shopify. You can see it started the year out at around $75 per share, and it fell all the way down to $49 to $50 per share before bouncing up to $69 per share following the latest financial release, but it's still down year-to-date in 2024. Shopify's management team saying that they drove strong growth in GMV, which stands for gross merchandise value, volume, revenue, and gross profit, all amidst the mixed consumer spend environment, and they continue to take share and concurrently expanded our free cash flow margin. All right, so let me take a deeper look into each one of these components. Let's digest this one at a time here. And let's start with the mixed consumer spending environment. So what I've seen from consumers in the last 3 months, which consists of the latest quarter for Shopify, is a normalization of spending behavior. What do I mean by normalization? Well, over the last 5 years, we've had unprecedented changes in consumer behavior, starting with the pandemic, which caused most consumers to spend significantly more money on goods because you were spending more time at home and things were closed. You couldn't go out to restaurants, you couldn't go to concerts, you couldn't go to ball games, you couldn't travel for the most part. You could, but it wasn't easy. And so people spent more money on things online. And that was great news for Shopify, right? Because they offer online solutions for businesses, and when people spend more money online, it's great for Shopify. Then you had the economic reopening, and that spending behavior shifted again in an unprecedented way again, and people were spending so much more of their money away from home on all of those things they couldn't spend money on during the pandemic. Okay, so 3 months ago, that started to shift again back to a more normalized mix of services and goods. So now people are getting back into that normal mix where it was in 2019, where you have a mix, right? You spend some time at home, you buy some things, and you spend some time away from home and you spend money on services. That's the normal consumer behavior. That's what I've noticed in the last 3 months, is a return to normalcy, a more normalized spending environment. Although it's still heavily weighted towards services, but it's getting more normalized, right? The services part of consumer spending is still elevated, and I expect that to continue coming down throughout 2024. But we started to see that shift starting 3 months ago, where people started to say, all right, you know what? I'm getting tired of going out and spending all this money away from home. I want to kind of relax more. I want to stay at home more, and I don't really want to spend all this money away from home. And that was good news for Shopify. But Shopify is saying a mixed consumer spend environment. So within that broader context I just highlighted, there is a mix between the higher income consumers and the lower income consumers. And that mix is that the lower income consumer is pressured now. All of those savings from the pandemic and those boosted unemployment benefits and consumer stimulus checks, those have all whittled away. And now that lower income consumer has a lot of credit card debt and is feeling a lot of pressure. Income is not growing as quickly. Inflation is pressuring spending. And so they're not spending as much money overall, whether it be services or goods. And so that's creating that mixed consumer spending environment on that subset of the broader mix that I highlighted between the shift of services and goods. And so with all that going on, Shopify delivered gross merchandise volume growth of 22% to 67.2 billion, which was impressive. And that growth has Shopify gaining market share in the online marketplace. So it grew faster than consumer spending increased in online spending. So that was good news for Shopify. So revenue also increased by over 20% to 2 billion. And that translates into 25% growth if you adjust out its logistics business that it sold off last year. And here we get a hint as to why I do not have Shopify stock rated as a buy. It was this blunder in the logistics business. Now, a couple of years ago, I did have Shopify stock rated as a buy. But as soon as they announced these billion-dollar investments in logistics and fulfillment, I downgraded Shopify stock because I anticipated it was going to be difficult and challenging. And it turns out it was. And it turns out it's going to cause billions of dollars in losses for Shopify before it's all said and done. So that's why I had downgraded Shopify stock a couple of years ago to a hold, and I've kept it there this time. So free cash flow of 333 million compared to free cash flow of 97 million from the same time last year. Again, this comparison is difficult because the same time last year, they were still with the logistics business. And so that comparison is a little bit difficult to compare, but it's still good that the company generated 333 million in free cash flow. Looking ahead, Shopify is forecasting revenue to grow at the low to mid 20s% rate on a year-over-year basis. So continued growth in the 20% range is good news. And free cash flow margin to be similar to the second quarter. And they expect to deliver double-digit free cash flow margin for the rest of the year. So Shopify anticipating continued solid results for the rest of 2024. They are not forecasting an improvement, incremental improvements throughout 2024, which I thought they would, given those consumer behaviors I highlighted earlier. But it seems as though with this outlook, Shopify is saying that lower income consumer, the headwinds from the decreasing spending from that lower income consumer is going to outweigh the benefit of the broader shift to spending more online away from spending in services. So that lower income consumer and the pressure that they bring down overall revenue is really, really impacting Shopify here, given their outlook for 2024 and the third quarter. So I highlighted that the investments in the logistics business have cost and will cost Shopify billions of dollars. Already in the same quarter last year, Shopify took a $1.34 billion write-down on the impairment of that logistics business. And it's still unclear whether the impacts of that logistics business investment have worked their way through the Shopify business. And so if I'm answering the question, is Shopify stock a buy right now? Am I upgrading it? Well, it's trading at a forward price to earnings of 52, which is the cheapest it's been. It's trading at this lower valuation since 2022, since really it made that acquisition, the logistics business. And I'm still not comfortable recommending this stock as a buy. I'm keeping it rated as a hold, and I'm updating that recommendation today on August 9th. And I'll let you know what I'm waiting for to upgrade Shopify. I'm waiting for all of the impacts from that logistics business to work its way through Shopify's financials. And I want to see where it settles out, how much losses they undertake, what percentage of equity value of the business overall is coming from the investment in that logistics business. Because when they sold that business, they still retained the business because they sold it for stock. They didn't sell it for cash. So they still own and they're still exposed to that business. So I want to know more about how that's going to impact the business longer term. And it's still unclear at this point. So while that's playing out, I'm keeping the stock rated as a hold. And this quarter was a good quarter for Shopify. Undoubtedly, it was a good quarter, and understandably, the stock price increased. So they are moving closer to being upgraded in my book. But for now, I'm still keeping it rated as a hold. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.